Some market opinion. First up, Neelkant Mishra of Credit Suisse believes that the metal stocks in India remain under-owned, while Arvind Sanger of Geosphere Capital says that the Fed may actually the cut by the Fed may or may not boost liquidity in the Indian market as much as domestic earnings recovery will.
On the Fed side, we are still quite constructive. What you have to also keep in mind, and we keep flagging this, I'm sure you're aware of this, but it's still important to keep in mind that what we see is the stock prices, but the market cap. But what really matters is the economic value. So while some of the stocks may have gone up 50%, the economic value may have gone up 10%, which means that EBITDA expectations have gone up 10%. So these are very heavily leveraged names. They're also going to be beneficiaries of lower interest rates. So yes, we remain very positive on metal names. And they're also still under-owned. You know, there's a very low conviction among investors on holding those names.
I think it's becoming more and more likely the Fed wants to go in December, and we'll get one rate hike there. So the liquidity at the margin is going to, at best, remain stable, maybe get a little worse. So that's not going to be a headwind or a tailwind. The real tailwind is going to come from domestic earnings recovery. And I think that's one where, we continue to see, frankly, a few green shoots, but the green shoots have not flowered into branches and trees and bushes and the kind of normal earnings growth that you would expect to see. So that remains the biggest, challenge and opportunity.